Hello traders and welcome to another video review. Today is Thursday, July 24th, 2025. Let's take a look at the economic calendar for today. So what do we have here? Asian session was quite, let's say, easy with data release, but we got the bank services PMI data from Japan, beats the expectations, previous 51.7, actual 53.5. JFK, German consumer climate, deteriorates further from minus 20.3 to minus 21.5. Now we are waiting for the manufacturing and services PMI from the major economies of the Eurozone, which means France, Germany, and eventually Eurozone. All of this data are scheduled between 9:15 and 10 o'clock. And data from the UK in form of the composite PMI, manufacturing PMI, and services PMI are scheduled for release at 10:30. CBI industrial trends order are scheduled for release from the UK are scheduled for release at noon. Then we got the data from the Turkey, 1 week repo rate, overnight borrowing rate, and overnight lending rate. All of them are scheduled for release at 1 o'clock. Deposit facility rate and ECB interest rate decision is the major event of the day and is scheduled for release at past 2. The market participants, the ECB, to hold the interest rate at the level of 2.15%. The monetary policy statement is scheduled for release at the same time. Building permits is the first major data event of the US session, together with the initial jobless claims from the US. All of this data are scheduled for us at 2:30, together with the core retail sales and retail sales data from Canada. We got the manufacturing sales from Canada at 2:30 as well, and the ECB press conference is scheduled for release at 2:45. And then we got the, of course, services composite PMI and manufacturing PMI data scheduled for release from the USA. We got data from the Japan. We got data from the Eurozone. Now the USA is scheduled for this at 3:45. At 4 o'clock, we got new home sales. At 15 minutes later, we got ECB President Christine Lagarde to give a speech. And at the end of the day, Fed's balance sheet is scheduled for release 10:30. Very busy day, including one interest rate decision from the European Central Bank. So please stay focused for the market volatility to increase during the data release event. Now, without any further ado, let's switch to the chart. We'll start with euro dollar. Ahead of the ECB interest rate decision, the market is positioning itself a little bit above the technical support of 1.1762, as eventually the traders are waiting for the ECB decision. The positioning here is very good for breakout higher above the July 1st, 2025 high at 1.1830. So any worse than expected data, like cut or hike, might result in a big jump to the upside. So we got this positioning here on the euro dollar market. As you can see, we got this slight divergence here, very slight divergence here between the price and the momentum. Nevertheless, volatility is limited. Market is positioning itself. We all are waiting for the data release. So euro dollar looking stable. British pound retraced 50% of the Fibonacci, hit the 50% of the Fibonacci retracement of this big swing to the downside, and we got some of the let's say candlesticks with big long upper shadows, which means that the market is the bearish side of the market is getting busy with the eventual pullback to the downside. Moreover, we got the extremely overbought market conditions, so it's about the time to do some pullback, maybe towards the 100 periods moving average, which is located at 1.3534. Currently, volatility is quite limited. Market is expecting the data to be released from the PMI data, obviously, and as you can see right now, big red candle is getting built back towards the technical support at 1.3562. So if we break below this level, the 100 periods moving average is next for a test. Right? It still looks quite good for the bulls. Nevertheless, please notice the fact that even because we moved to the upside towards the 50% of the Fibonacci retracement, it's still a half of the swing down, so it's still being considered as the correction of the overall downside movements. So we need a decisive breakout in one of these big levels in order to continue or reverse the trend on the British part. For now, in the short term, test of the 50% of the Fibonacci retracement looks like some sort of the pullback right now, but markets are still waiting for the data. What's going on the gold market? The gold market retraced lower from the level of 3,438 back down below 3,393, which is now technical resistance, and it's testing the support at 3,374. We moved lower because of the extremely overbought conditions were hit. Now the RSI is at the level of 44, but we're still trading above this trend line here. So don't worry about it just yet. It looks like a typical movement to the downside. If we apply the Fibonacci retracement, to the last swing only, we retraced 50% already. The 61% of the Fibonacci retracement is located roughly around $3,359. So we still can get deeper, and it will be considered corrective, right? So don't worry about it too much just yet. Nevertheless, it looks like a very aggressive and dynamic swing to the downside after the extremely overbought conditions were hit. So that's the gold market here. Let's take a look at the Bitcoin. The Bitcoin is testing the trend line breakout. The Bitcoin is testing the trend line breakout to the downside, sorry, to the upside, of course. Let me just make this line a little bit thicker so you can see what's going on here. Yes, we went as high as 120,338, then test the trend line. We went up, then we got the kind of an engulfing pattern, but it's in a rock pace, but it looks like an engulfing pattern, and we're testing this again. Maybe it's because the 100 periods moving average is very, very close. So that's why the bulls are quite confused and they don't know how to react properly. Nevertheless, it still looks quite good for the bulls. Let me just place some horizontal support levels so you can have them on your chart as well. So we got this zone here. Built by the bulls. So it's kind of a nice to see it. As you can see, divided into two zones. Nevertheless, it's a very strong zone, tested many times, and we shouldn't have any bulls shouldn't have any problem to bounce from this zone and head towards the all-time high. Nevertheless, momentum is hovering around the level of 50. It's not going towards the extremely overbought levels, neither towards the extremely oversold levels. So neither bulls nor bears are in charge of this market yet in the short term. In the midterm, of course, the trend is up. And the Ethereum, of course, pulled back a little bit, and now this pullback is looking bigger than previously. Now it's looking at -8 and 50%. So right now, this correction to the downside is bigger than expected, and it's a bigger correction, the biggest correction in this uptrend. So -8.50. So the last chance for the bulls here to gain the momentum is from this level here, 3,478. If we gain the momentum, then obviously that machine can roll higher. If we hit 3,478, eventually almost 10%, almost 10% down Ethereum would be, right? So please keep an eye on this situation. Momentum wise, we are below the level of 50 and moving lower on the 4-hour time frame chart. On a daily time frame chart, we are coming off the extremely overbought conditions, so it looks like the current situation is in the short term is bearish. Nevertheless, the wave 3 is still in progress, and when this correction is done, markets should resume their up cycle. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.